If you've got $1,000, this video could change your life. So, what happens if you invest just $1,000 in Fidelity's top index funds? No, not $10,000, not a million, just $1,000. Most people think that's too small to matter. But let's be clear, it's not. Because when used right, that $1,000 can grow into something surprisingly big. And in this video, we'll walk through exactly how that works, step by step with real numbers. We'll look at 3 of the best Fidelity index funds, the data-backed kind, not the ones some finance bros hype up on TikTok. Yeah, I said it. Let's be honest, some of that stuff is just entertainment. But this is for people who want real, steady growth without staring at charts all day. We'll break down what each fund does, where your money goes, and how much it could grow. So if you've got $1,000, this video might just change how you think about investing. Chapter 1. Why Fidelity Index Funds? Alright, let's talk about why we're even using Fidelity in the first place. Because yeah, there are a lot of places you can invest, but Fidelity stands out for a few solid reasons. First, low fees, like really low. Some of their index funds have expense ratios as low as 0.015%. That means almost all of your money stays invested instead of going to fees. Second, no account minimums on many of their funds. You don't need thousands to get started. Even $1 is enough for some of them. Third, they've been around forever, trusted, stable, and built for long-term investors. Also, no constant trading behind the scenes. Their index funds are passive, which keep things simple and steady. You're not picking one stock and hoping it moons. You're buying entire slices of the market instantly. And for beginner or busy investors, that's a game changer. Chapter 2. Why $1,000 actually matters. Now you might be thinking, okay, but is $1,000 really going to do anything? And that's fair, because let's be fair, $1,000 doesn't feel like a big investment. But here's what most people miss. It's not about the amount. It's about what that money does over time. If you invest $1,000 into a fund earning just 10% annually and leave it alone, that turns into about $17,500 in 30 years without adding another penny. That's the power of compound growth. But what if you also reinvest the dividends? Now you've got a snowball effect. A slow build at first, then it picks up speed. It's like planting a tree. You won't see much in the first season, but come back in a decade, that thing's a forest. Also, starting with $1,000 builds the habit. You start watching your money grow, and suddenly, you're motivated to invest more. It's not about perfection. It's about momentum. And guess what? Most millionaires started with way less than $1,000. So don't wait for the right time. This is it. Chapter 3. Top 3 Fidelity Index Funds to invest in. Alright, now let's get to the core of this video. You've got $1,000. Let's not let it sit idle. Let's put it to work in 3 of the best Fidelity Index Funds out there. Now, we're not going to gamble here. We're going to diversify smartly, just like a balanced portfolio should. Here's the plan. We'll split your $1,000 across 3 funds, 40%, 35%, and 25%. Why that way? Because we're going for a mix of growth, stability, and tech upside. Let's break it down. Number 1. Fidelity Nasdaq Composite Index Fund, FNCMX. 40% allocation, $400. Let's start with growth, and FNCMX is the perfect place for that. This fund tracks the entire Nasdaq Composite Index. That means you're buying into Apple, Amazon, Microsoft, Nvidia, and over 2,800 other companies, all in one go. So what's the catch? Well, it's heavily tech-weighted, with nearly 50% in technology. But that's also where the opportunity is. Let's look at the numbers. Over the last 10 years, FNCMX delivered a total return of 207.77%. That's an average annual return of 12.07%. And it's done that while keeping its fees super low, just 0.29% expense ratio. Dividends? Yes, but small. Roughly 0.72% yield with a 9.57% dividend growth rate, which means it gets better the longer you hold. Now, if you drop $400 into FNCMX today and let it ride, no extra deposits. After 10 years, you could have around $1,358. Stretch that to 30 years, you're looking at roughly $140,000 if returns stay consistent. That's from just $400. This one is your long-term growth engine. Number 2. Fidelity Total Market Index Fund, FSKAX. 35% allocation, $350. Next up, let's go for stability. FSKAX is like owning a slice of every US public company. Big companies, small ones, tech, healthcare, banks, you name it, it's in there. This is your all-in-one diversified base. The average annual return? About 9.42% over the past 10 years. Not flashy, but rock solid. It weathers market swings better than sector funds. But here's what makes FSKAX powerful. Dividends. It pays a healthy 2.17% dividend yield, and that dividend has been growing like crazy. The CAGR for its dividend? Over 15.3%. That's rare. So let's say you invest $350 into FSKAX, reinvest every dividend, and forget about it. After 10 years, it could grow to around $1,114. But after 30 years, you could be sitting on over $86,000. That includes steady growth and rising income, without needing to predict which sector wins next. FSKAX is the foundation, the one to hold forever. Number 3. Fidelity MSCI Information Technology ETF, FTEC. 25% allocation, $250. Finally, let's talk about upside. FTEC is a pure play on technology. Apple, Microsoft, Nvidia, Visa, all packed into one fund. It's not diversified, and that's on purpose. This is your rocket fuel, the one you use when you want to go big over time. Now let's be real, the dividend yield is tiny, about 0.55%. But you're not here for income, you're here for growth. And growth is what FTEC delivers. Its average annual return? A massive 17.56% over the past decade. That's one of the highest in Fidelity's lineup. So what happens if you drop $250 into FTEC and hold long term? In 10 years, that can grow to around $1,250. But over 30 years, you're looking at a potential $33,700 plus based on historical returns. That's from just 1/4 of your $1,000. Now, is it riskier? Yes, but with a smaller allocation, it balances out well. Putting it all together, the $1,000 plan. So here's the recap. $400 in FNCMX, $350 in FSKAX, and $250 in FTEC. You've now got exposure to over 3,000 companies across all major sectors with a lean toward tech. Now here's the part most people don't think about. If all you did was invest $1,000 this way and never touched it again, this portfolio could realistically grow to over $260,000 in 30 years based on blended historical performance. And yes, that's without another single dollar added. Pretty wild for just $1,000, right? And imagine if you did this every year. Now you're not just investing, you're building wealth with zero guesswork. Chapter 4. Portfolio Summary. The $1,000 breakdown over time. So, let's put everything together. You took $1,000 and split it smartly. 40% into FNCMX, 35% into FSKAX, and 25% into FTEC. Now, what does that actually mean long term? If we go by historical returns, and yes, past performance isn't a guarantee, but it's a good guide, your $1,000 could turn into around $260,000 or more in 30 years. That's without adding a single dollar. FNCMX brings in consistent growth. FSKAX adds a steady dividend-powered base. FTEC gives you high-octane upside from tech. Together, this mix spreads across over 3,000 companies, across every major sector. It's diversified, it's balanced, and it's powerful. Remember, this isn't just a portfolio. It's a time machine. The earlier you start, the better it works. And the only mistake is waiting. Chapter 5. Final thoughts. How to take action today. So, what should you do right now? Simple. Open a Fidelity account. It's free, it's easy, and it takes minutes. Then search for the funds: FNCMX, FSKAX, and FTEC. Pick your split: $400, $350, and $250, and start investing, even if it's just partial for now. Make sure to enable dividend reinvestment. That's how your money multiplies over time. And if you're nervous, don't overthink about it. This strategy is built on logic, not luck. You're not trying to beat the market. You're learning to ride with it. A small step now makes a big difference later. If this video helped you see investing differently, hit that like button. Drop a comment below. Would you invest $1,000 like this? Or would you split it in another way? And don't forget to subscribe, because we've got more fact-based, no-fluff investing videos coming soon. You don't want to miss them.